So diving into it, there are 4 key benefits to this, to hiring your kids if you do it correctly. And number 3 is the game changer. Welcome in everybody to REI Tax University, where our goal is to help you use real estate investments and activities to lower your overall tax burden and keep more of your own money by utilizing the legal benefits of the IRS and state tax codes. And today we're talking about a topic that comes up frequently. Can you hire your kids? How can you pay your kids through your business? Is it legal? How could you even do it if you wanted to? And what are the tax benefits to doing so? So there's a lot to unpack here. Can you do it? Should you do it? And how do you do it? Let's jump in. Now, quick disclaimer to start here for this video and really any of our videos that we post is you are welcome to follow along and keep focus on my mug up here, but you're also welcome to stick the phone in your pocket, put something up, put the video in the background and just follow along with us as we talk. I will let you know if you need to direct your attention to the screen for anything that we're showing here as we go through these videos. So the first question is, can you do it? For a lot of people, this seems like one of those out there type of strategies, like it shouldn't be legal, but can you do it? And the short answer is yes, you can do it. You can legally hire anybody that you want to work in your business, and you can pay them to work in your business. Now, diving a bit deeper, what you need to understand is that hiring your kids is going to be looked at and scrutinized a little bit differently than hiring someone else. It's considered an arm's length transaction. So if you're hiring your kids or anybody else that you're directly related to, you're gonna need to make sure to dot your I's, to cross your T's, and to do things right so that the transactions all are reasonable, all are economic, and they actually work for you and your business and not just to be looked at as a tax avoidance scam. So the biggest piece to this by far is that if you want to hire your kids to work in your business and you want to pay them, you have to actually hire them and they actually have to work in your business. And it has to be things that you would pay other people to do, right? So it can't just be, I'm hiring my baby to be the model and I'm going to pay him $10,000, because in reality, you wouldn't hire another random baby and pay them $10,000, right? And the way the IRS would look at this through the tax court cases and has is that you could have just got those stock photos, or you could have went and you could have hired another baby and paid them far less than $10,000, $15,000 a year just to take some photos and put up on your social media. So unless you're in the business of maybe selling Pampers or diapers or selling some baby clothing at high end, it is going to be a stretch that you're hiring that baby or toddler just for modeling purposes and paying them that high of a salary. But now what about bringing your kid in for 2 hours a week, each week or so? They come in, they shred paper for you, and you pay them $300 a month. Well, realistically, go look at the rates that you would have to pay a shredding company to take your stuff and to do it. $300 a month for 8 hours of work, shredding paper and maybe doing some other office work. Isn't that outlandish? You could realistically justify that your business is paying them. They're providing a service that helps your business, and it's reasonable amount that you're paying them. Now let's move on to should you do it? So what are the benefits to actually paying your kids, and why should you even consider it? Well, there's a few things that come up here, which is shifting income, shifting expenses, and potentially setting your kids up for life with tax-free retirement income. So diving into it, there are 4 key benefits to this, to hiring your kids if you do it correctly. And number 3 is the game changer. So let's jump through these. So the first one that comes up is the benefits of shifting the income to your kids and the fact that your kids could have potentially no taxes on this money that you shift to them. So let's take an example where your business makes $200,000 in net taxable income. So if you didn't hire the kids, you'd be paying your taxes on that $200,000, right? Probably somewhere between 20 to 30% in taxes that you're paying on that money. But instead, you can justify hiring your kid throughout the year and paying them wages of around $10,000. You're going to get a direct deduction for this. So you're going to go from $200 to $190, right? So you're paying tax on $10,000 and less money. Now your kids get this $10,000, but they get a standard tax deduction of $15,000. That's the standard deduction as of March 2025 when we're filming this video, meaning they can earn up to $15,000 without any income tax hit and without the need to file an actual tax return. Now, if all they have is this money that's coming from your company that you're paying them, they're going to be fine if you're paying them $10,000. If they have some other outside money that puts them above that $15,000, they're going to start to pay taxes at a rate of 10% federally and probably somewhere between 4 to 14% state-wise, depending on which state you're in, that they'll start to get to. But again, they're probably still at a much lower rate than you. So if you have a 16, 17-year-old that's making $20,000, $30,000 a year, they're probably still paying tax at a lower rate than you are. Now, the next key that comes up with taxes and tax savings for the kids is that if you do this effectively, the kids don't have to have any Social Security or Medicare taxes withheld. You don't have unemployment taxes that you have to pay as the employer, right? So if you're hiring your own kid or your step kid and you're paying them, now you want to do this through an entity that is not an S corporation and it's not a C corporation. If you do it through one of those entities that's not an S corp, that's not a C corp, you as the employer are not subject to Social Security or Medicare taxes, and the child is not subject to Social Security or Medicare taxes. If you wanted to pay them as a subcontractor, like a 1099, they're not subject to self-employment taxes. So that's a huge benefit. We're talking about kids that are under 18 years old. When you hire them through an LLC disregarded entity or through a partnership, you do not have Social Security or Medicare taxes or income tax withholdings most likely. So you're going to pay them, and that child is not going to have to pay any tax on the money that they. So in theory, you could pay each child up to $15,000 without any tax implication to the child, and you would get a $15,000 deduction for your business. That said, you're going to need to make sure that their work is justifying them making $15,000. And I'll sit here and tell you that if you paid that child exactly the standard deduction every year, and an auditor comes and looks at this, they're going to be like, wow, they make exactly this amount to keep them under the threshold. So you really do want to make sure you've justified what you're paying them, why you're paying them, that the work is being done, that they have an employment agreement on file, that you get them a W-2 at the end of the year. You want to make sure you're doing all the documentation that you need to do. So you've shifted income off of your books. They're not having to pick up the taxes on their end of things. And now to the real game changer, using the custodial Roth IRA for the child, right? So this kid on their first $7,000 in earnings now, they can stick that into a retirement account. So they could use a traditional or a Roth IRA. And here's where understanding the differences in these accounts becomes very important, right? There's no need typically that they would put this into a traditional account, because the benefit of a traditional account is that you put the money in and you get a tax deduction. They don't need a tax deduction. They're likely at zero to little taxes. So instead, they would use a Roth, where you put it in, you don't get a tax deduction, but it grows tax-free and distributions are tax-free, as long as they're done in retirement or for a qualified exempt purpose, right? So you set up a Roth IRA for the child, you put in the max every year of $7,000. So if the kid made $10,000, the first $7,000 goes into this Roth IRA. They're not going to have any tax hit this year because they're going to be under the threshold. That money's going to grow tax-free. And if they wait until they're 65 plus to take it out, you do this from the time they're 12 to 18 years old, they're probably looking at over $1 million in tax-free retirement income. We'll go through another actual example of this in a future video. But now maybe you're sitting here saying, well, what about that extra $3,000? I'm paying them $10,000, $7,000 goes to the IRA, but what about the other money? Or actually, man, we really still need that money for household expenses and family expenses. Like, so $7,000 is a lot to give up to put it into an IRA. So let's talk about the other factor here, which is shifting expenses. So as long as you can justify that your child is doing work and you're paying them out a wage, right? So whether that's the first $7,000 goes into a Roth or not, you can also use the excess money, or you can use this money to pay for deductions that child has directly, right? So instead of you paying for these things like private school and sports and equipment and clothing and gas and saving for a car and all this stuff that you're going to pay for your child, that's now coming out of their own account. So this is an opportunity for you to teach them about business and about financial literacy, right? So you can both get in, you could do the $7,000 to the Roth, and you could use the remaining $3,000 to teach them, okay, here's how we're going to use this, right? Or we're going to save this towards this, or you're now paying for your own baseball or soccer or cheer or whatever it comes out to, right? Those are ways you can utilize this. There's all kinds of other opportunities and things you can do there, but at the very least, you've taken these items, if you were paying for the car out of your pocket, you've earned that money, right? You paid your taxes on it, and then you go pay for it. But if you shifted it to the kid as wages, you get a deduction, right? They're not picking it up as taxable income because they're under the threshold, and then they go pay for their stuff. So you've taken money that was after tax funds that you had to pay for your expenses for, and you've made them pre-tax funds. And anytime you get an opportunity to do that, if it can work, go get it. So now to the most boring but the most important part of it. How do you do it? And this part is key, because I've seen people come in that are like, I paid them a few $1,000s last year, can I deduct that? And it's going to be challenging. You need to make sure to document it, and you need to make sure that you're doing it right, that the processes are set up right to do this so that you can legally tackle it and we can go after this highly advantageous tax strategy. So how do we do it? The first step is you need to actually hire them, just the same as you would hire anyone off the streets. So we need an employment agreement in place. Define what they're going to be doing, the activities, lay out the terms, when they're going to get payments, lay out everything you can in that employment agreement. You can find drafts of these. If you have another employment agreement, you can update that and adjust it to make it fit for them. But you're going to have that employment agreement. You're going to sign it as the employer, and the child is going to sign it as the employee, and you are going to keep that on file, and you are going to follow it. The next steps is the kid actually has to be doing the work that you're laying out for them, and you have to pay them a reasonable wage for doing it. If one of your kids' jobs is going to be to mow the yards at your investment properties, and you're going to pay them $100 to mow a small yard at one of the investment properties, that might be a fair, reasonable wage, right? We're in the middle of Missouri, maybe that's a fair wage. In California, that might be really low. In another area, that might be really high. So these are things you need to be aware of and need to focus on. Am I paying them a similar amount that I would pay someone or another third party to do this job and these activities? And then actually pay them the money. So now that they've done the job and that you've told them what they're going to get paid, you need to actually pay them. So again, you don't have to run this through payroll unless it's an S Corp or a C Corp. You can simply take the money, the funds, and transfer them from your business account to a custodial account for that child, right? So if they made $1,000 for the month, you're going to pay them $1,000 on the day that you said you're going to pay them. If you say, hey, we're paying you the 15th and the 30th, pay them on the 15th and the 30th, right? That's what you need to do. You need to set up these systems and you need to make sure they're in place and you're following them. You also are going to want to document what they did. So if all your other employees work off timesheets or time logs, you're going to want to make sure they do that same thing. If not, you're at least going to want to recap of here's the work, here's what they put in this month, and here's what I paid them out, so that you've got documentation to back it up why you're paying them this money and why you're able to claim it as a deduction, right? As a outside contract work or a wage deduction for the money that you're paying. Now, once you've paid them, if you're planning to go with the Roth method, which I highly recommend looking into this if it's something that you guys are going to do, if you have the capabilities or to do it at all, look into doing a Roth IRA for the child with their earnings, especially if they're under 18, because it can be pretty lucrative with the timing that they have to grow that money. And even if they need to take it out early, there's likely going to be ways they can do that for education or for qualified purposes, or even just to take the contributions out when they need it. I would highly recommend looking into the strategy of opening a Roth IRA for them. But you would get that Roth IRA set up with your financial advisor. You could go out there onto Fidelity or one of the other financial institutions and open these custodial Roth IRAs up, and then you're going to set up that transfer so that the child gets paid, the money goes into the custodial Roth IRA, and now it's in there growing tax-free for them. And then from there, it's not just to set it and forget it. Just evaluate what the kid's doing, the level of activities they're doing, and how much pay they're actually getting. So if the kid has gone up, if he's gone from 12, 13, 14, 15, and he's doing a lot more work or a lot higher level work, raise his wages, get him more money, right? On the flip side of that, if he stopped working, so if it's sports season or whatever, or he just decided it's not working, make sure you're not still paying him, because if this gets looked at, when it gets looked at, that's what they're going to look at is, was he doing the work? Was she doing the work? And did they actually justify the pay that you paid them? And then was it all done properly? So just make sure you're monitoring it. You're increasing their pay if it needs increased, you're decreasing if it needs decreased, you're changing up the employment agreement if their role changes, and that you're not just setting it and forgetting it. Now, the question that should be on your mind, and probably has been on your mind this whole time, is how old does my kid need to be for me to actually hire them? And the good news here is that there is nothing written into the IRS code about how old a kid needs to be to actually hire them. And the bad news is that there is nothing written into the tax code about how old a kid needs to be to actually hire them. So it is up to you to determine, and you need to determine, are they able to do the work, and does the pay match the work that they're doing, right? So that all said, while there's nothing black and white written down on what it is, there's been tax court cases where they've disallowed things, they've allowed things, and usually the youngest I've seen is about 6 to 7 years old, where they can really uphold the level of work that they're doing and the activities that they're doing. I would say the majority of our clients who are doing this, they come in and they start it up when their kids are closer to probably 11 to 13 years old. Really, that 12 to 14 years old, 11 to 13 years old, that's a magic spot to kind of get them hired, use time, get the money into their Roths and everything. But again, if they're 15, 16, get them hired. There's ways you can do it once they turn 18 too, which we'll talk about in a future video. But definitely once they reach that early teen, preteen years, that's time to think about it. And if you have a strong child that can do stuff, that wants to do stuff, that's actually willing to put in the work, then maybe you can go a little bit younger. What's going to get tough is going super young and trying to use them as the model. That's not going to be viewed at very well, and we'll talk about that a little later. So now let's run through some buyer beware things when it comes to hiring your kids. So these are kind of the red flags, the things to be aware of. So if you hear the video saying, hey, hire them for this or do it this way, you just might want to take a step back or take that with a grain of salt and be like, should we do that? Are we able to do that? So the first is paying them out bonuses and sign-on bonuses. So sign-on bonuses are almost never going to be looked at. Your child is probably amazing, but unless they're a 15-year-old super guru who Google wants to hire, why are you paying them a sign-on bonus? And that's the way the IRS is going to view this. So if you're like, well, we gave them $10,000 as a sign-on bonus early on, they are not going to like that for the most part. They really like the hands dirty work. They don't want to see that you're paying them this fathom type of money. And that's where the sign-on bonus comes at. Now, for a normal bonus, if you can show that you've got terms set up, that they can earn this bonus, if other employees or contractors are earning these bonuses, there may be a reason that they can earn this bonus. But if they're the only ones earning this bonus, it's going to be a tough battle. And I would say try to structure it a different way so that it doesn't look like you're doing this just to them for a bonus. Possibly work that into their contract and make sure you can show that they met these performance standards that give them this bonus. But really, I'd try to steer clear of the bonuses unless it's a general bonus that you're paying out to everyone and your child's part of the workforce, and so they're getting the same kind of bonus. We've talked a lot about this throughout the video of the modeling type thing. And again, it's usually going to be scrutinized. It's not going to hold up very well. Now, that can be a part of what they do. So it can be, hey, they take photos with us. They're on our social media and that stuff. And you could pay them some for that. You're just not going to want that to be the only thing that they do. So again, if you've got a baby or a toddler that you're trying to justify that you're paying this much money, look into using life insurance or something else here. Paying them and using the Roth, it's going to be an uphill battle for that. You're probably not going to get a lot of money into that if you're really being honest about how much you're paying them. And again, there's certain industries, maybe if you're in a diaper type industry or a little kids clothing type industry, where you could justify paying them a little bit more. But in general, the IRS is going to look at this and say, yeah, they're not earning $10,000 because they took photos for an hour one day and you put them up on your site and everything. So they really don't love the modeling when you go through any of the tax court cases and start to look at how they've come down on that. The other item to be aware of here is the chores. So the chore type activities. So if you're hiring them and their only activities are, oh, they're going to clean the home office or they're going to wash my truck that I use for the business, those are going to be scrutinized as well. Again, this can be a part of the things that they do and a part of their total job description. And some of the time they can be doing these things, but all they're doing is chore type activities. That's going to be scrutinized. It's not going to be looked at well. So you definitely want to make sure there's a reason and you would pay someone else to do this through the business. Now, the next piece to keep in mind here is that it has to be your own child or your stepchild. So grandchildren work differently. There's a kind of a way to get them done. We'll talk about in a future video, but if you hire a grandchild directly, they're going to be subject to Social Security, Medicare taxes, or self-employment taxes. Nieces and nephews the same way, friends' kids the same way. Like, they are subject to these taxes. Now, they're probably under the threshold to have to pay income taxes, so you likely don't need to withhold income taxes, federal or state, for them, but they're probably going to be subject to Social Security, Medicare, and unemployment taxes. At least you are as the employer on the unemployment taxes. But that's what big thing to know here is we're talking about your own kids or your own stepkids when we're talking about hiring children. And the final kind of buyer beware item here, which is actually an opportunity, is to hire the child as a board member. So this works really well when you get the older children. So going over 18 years old, they're more sophisticated. They can actually provide some mindset stuff to the business and some knowledge to the business and things. Those would be great to start to talk about, okay, you are going to be a part of our board. We've got our board set up, or we're setting it up, and you're going to be a member of that board and help us out there, especially if they're moving away and they can't do all the work in person. These are going to be times to do that. But again, you're hiring a young kid onto that board. It's going to be scrutinized as to what level of work are they actually doing for the business. Again, they like the hands dirty type work. They like their painting, their moving stuff, they're mowing, like they love that stuff. But when it comes to things like, okay, we're paying them as a board member, you're going to really need to make sure it's reasonable, and you're going to need to make sure that this child is really in a place where they can benefit the business as a board member would. Thanks for following along, guys. I hope you've gained some knowledge and some tidbits that you can take away from this video that can help you as you think about hiring your kids. Maybe you already have them hired or found out through this video that you're just not doing things perfectly. Maybe they're hired through your S Corp or your C Corp. We've got a future video on how to maybe change that up if you want to, so that you're not paying those Social Security and Medicare taxes. Or maybe they're already hired through your normal LLC disregarded entity and you've been withholding those taxes and you're like, shoot, I didn't know that I didn't need to withhold those taxes. So hopefully you've gained some insights from the video on how you can do it, why you should do it, and if you can do it overall. So, and you can kind of take that for your own situation and know, yep, this works great for our family. It's a great opportunity. I can teach my son or daughter business. I can teach them financial literacy. We can set them up for life with potential tax-free retirement income. Like, there's just all kinds of benefits to it. Or maybe you're on the flip side of the fence and you're like, yeah, it's never going to work to hire that child in my business. So it's great to know, but we're not going to do this. Guys, if you're watching this video and you're not a part of our REI Tax University community, I invite you over to reitaxu.com, where we talk all things tax planning for real estate investors and professionals. So tons of more of video content such as this, when we're talking about hiring kids, meeting reps, deep diving into bonus depreciation and cost segregations, and all kinds of other strategies that can help you use your real estate business activities and investments to lower your taxes and keep more of your own money, right? That's going to help you accelerate your wealth and accelerate your portfolios that much faster. So jump over there, become a member, start to get active on the forums, join in on our office hours and our case studies, start to dive into our resources and our video content. We've got entire courses out there and resources that you can use. So we hope to see you over there, guys. I appreciate you following along, and until next time.